Welcome to this week's Market Outlook. Global investors turned cautious as AI stocks sold off, the US government shutdown dragged on, and rate cut hopes began to stir in the UK. Markets entered a clear risk-off mode this week. Growth fears, stretched tech valuations, and political gridlock rattled sentiment across major economies. After months of optimism, investors are beginning to question whether the rally can hold. The biggest story came from the AI and tech sector. Nearly $1 trillion in market value was wiped from major tech giants as traders reassessed sky-high valuations. Even the biggest players, once seen as untouchable, saw hundreds of billions erased in days. It's a reminder that when expectations outrun earnings, corrections follow fast. Adding to the unease, the US government shutdown continues to bite. The Congressional Budget Office estimates it has already knocked $18 billion off fourth-quarter growth. If it stretches further, losses could reach nearly $40 billion. Some of that damage, around $7 to $14 billion, will never be recovered. Consumer confidence has collapsed to one of its lowest levels on record, with households anxious about disrupted services and paychecks. In the UK, the Bank of England held rates steady at 4%, but the tone shifted. 4 out of 9 policymakers voted to cut rates, signaling that inflation pressures may finally be easing. With headline inflation expected to drop toward 3% next year and return to target by 2027, markets are now betting on a possible rate cut as early as December. For investors, the message is clear: the cycle is turning. Staying defensive could be wise, favoring quality companies with steady cash flows and strong dividends. Bond markets remain volatile, so short duration and inflation-linked assets may offer relative safety. Still, the recent pullback in tech and cyclicals could open selective opportunities if rate cuts gain traction and growth stabilizes. Emerging markets are also seeing an interesting shift. Capital is rotating away from China and into economies like India, Taiwan, and Southeast Asia, regions benefiting from younger populations, industrial diversification, and faster tech adoption. But the backdrop of higher for longer rates and global uncertainty means selectivity remains key. Looking ahead, the focus will shift to fresh clues on institutional positioning. With the shutdown freezing official data, investors will turn to 13F filings due November